to talk to us about all that's happening in the macro front, on the macro environment. Garima, good evening. Welcome to the show. It's great having you here. Let me quickly take it straight to all with regard to the GDP number, 7.8%. What's the preliminary sense that you have with regard to this number? Largely in line. But more importantly, my question is with regard to the rates. How much of the rates have actually translated onto the GDP growth number, and how much is still left?
Right. On the headline number, certainly the GDP print looks good. It started above my expectations, about 40 basis higher than what I expected, but tad below RBI's own expectation, 20 basis point below RBI's expectation. But when you look at the internals, it is quite clear that there has been some moderation that is starting to kick in private final consumption expenditure. But look at Y&Y numbers, they will not tell you the story. But if you look at it as a private final consumption, as a rate of GDP, that kind of tells you there is some bit of weakness that is beginning, or normalization, I should say, that is beginning to kick in. At the same time, the KPEX story remains strong. Your investment as a percentage of your GDP continues to stay at 34.7%, which is almost equivalent to what was in the previous quarter. So I would say initial prints encouraging, higher than consensus expectation, but internally you're beginning to see some initial signs of moderation or normalization of consumption demand. Remember, last 3 to 4 quarters, it was services sector that was driving the growth, and that continues to be, but that is urban-centric driven. You're still not seeing significant signs of improvement in rural demand, number one. And at the same time, there are worries that with rebound of inflation, particularly food inflation, the second quarter of the current financial year might also see some pullback in consumption. So I would say headline looks great, but internal, I would say some initial signs of moderation kicking in when it comes to private consumption.
Right, and let me take a cue from your answer, right? Let's talk a bit about both rural as well as MSME. How do you see those trends shaping up with regard to growth in rural? Because that's certainly been a bit of a concern over the last year or so.
Right. When it comes to rural, there are 2, 3 factors that are currently in the gray area. One, of course, you've had August, which was the driest month you've seen in terms of monsoon in 123 years of India's history. Number one. Number two, there's also, even as your north of India continues to get surplus rains, there's a serious deficit that is staring at you in south of India, particularly Rayalaseema, Kerala, and east of India, which is your paddy belt of West Bengal, east of Uttar Pradesh, as well as Bihar. Now, while early days yet, you may not be able to make a pronouncement that for certainty your output will be lower. But if it does not rain in next 10 to 15 days, we seriously are staring at some concerns in terms of agriculture demand. Now, when it comes to agriculture output, that will have a second round impact in terms of rural growth. Now, this is coming in the conjunction when at one angle, you already were seeing a moderation in rural demand. You had just begun to see some signs of bottoming out of, I should say, inflation. And then there has been a nasty rebound. And third problem has been that your wages, which had just about started to turn positive on real basis, will again take a hit in the second quarter because of rebound in inflation. So at least in the second quarter and nearabouts, you might begin to see your rural story, especially volume recovery, continue to remain muted. However, if you do see recovery in monsoon towards September and thereabouts, then you should anticipate a relatively better festive season, because the food inflation, which is now seeing an ugly print currently, should start to correct itself by October, November. That's when your seasonality starts to kick in. So I would be a little cautious in terms of rural demand, at least in the current quarter. But if monsoons pick up and inflation starts to moderate, I'll be more sanguine about recovery in the third quarter.
Right. So those are her views. But let me take one last question with you, Garima. What are your views with regard to the KPEX cycle? So the government is obviously giving a very good fillip to KPEX. It has been trying to egg on KPEX for a while now. How are you seeing KPEX, especially on the private KPEX front?
There is no doubt that ever since COVID, government has been pressing the pedal when it comes to when it comes to capex. And even in this year's numbers, first 4 months, the data for which fiscal data was released earlier this evening, you're seeing a growth of 52% year on year, April, July, compared to April, July last year. That's a massive front loading of expenditure, especially capex. But what was the missing part of the story until last year was the states were not spending, which probably is now the part of the puzzle that is getting joined, because states have also been aggressive on spending, and private capex was somewhat patchy and was concentrated in only one or two sectors. But more and more, when you look deep dive and look at the CMI data in terms of approvals or new project announcements, even if you exclude the lumpy sectors such as your orders for aircrafts, you will see there has been a reasonable uptick of more than 30% year on year in terms of new project announcements only by private sector. Now, I would still say the early days yet because they're largely concentrated in five, six sectors which are beginning to gain or are showing very solid gains of China plus one. But RBI data in terms of sanctions and approvals for the data which was released for last financial year shows there has been a significant uptick in terms of loan sanctions for KPEX. At the same time, as long as India continues to remain on steady growth path of about 6% or thereabouts, you will see a recovery in KPEX cycle picking, especially for sectors which are being handheld by the government and for sectors where investment cycle has been long or has been probably long missing, particularly in terms of ferrous metals or EVs or battery or storage or green energy. So I am quite positive about India's capex recovery that is kind of showing up also in the pay in at the I should say the performance of cap goods sector in India over the last 6 to 8 months. And I do think this financial year you should see somewhat broad basing of the capex, particularly from the private sector, and that probably will be led largely by government policies and support on the spending side.
Right, so patchy but positive is my takeaway with regard to KPEX. Thanks so much, Garima. It's been a pleasure speaking with you. And of course, on behalf of all the viewers, it's great having that context. That was Garima Kapoor of Elara Securities.